give me your take on this Trump trip. Would you give him thumbs up?
Well, I'm sure from the president's perspective, the trip went fine because, as your correspondent said, he got to announce a bunch of deals, many of which had in various forms been announced previously, but he could highlight.
Right.
And there were no particular gaffes, and I'm sure he thought the trip went fine. In a broader sense, I think it's remarkable that the 11 other nations are going ahead with TPP.
Right.
Trans-Pacific
Why is that
Partnership.
remarkable?
Because historically, the United States has been the leader in trade reform, and this is the largest trade deal ever negotiated. And the United States is not only a leader, it's not only not a leader, the United States is opposing it and not participating in it. That's historically quite unique. I happen to think it's unfortunate, but my point is how striking that really is. As for the president's offer to mediate the disputes in the South China Sea, I'd say the chances of the Chinese, for example, accepting that are below zero.
Right. If there is, right? The Democrats, though, have been quite harsh on this trip. I mean, I think Senator Chuck Schumer had put out something along the lines of, that it was he was pandering to Xi and to the Japanese, and was essentially looking like an accidental president.
Well, the president has a habit. This president has a habit of going to various countries and supporting strongmen as or figures that in most respects constitute strongmen, whether that's Saudi Arabia, whether that's China, whether that's the Philippines or elsewhere. And instead of striking a balanced tone and, for example, talking about human rights in China, he just says Xi is great, or Duterte is great, or MBS in Saudi Arabia is great, and I support him completely. And it's a little bit of a different approach, if not a considerably different approach than historically has been taken, because historically, if an American president went to China, he would at least refer to some of the repression that we all know is a hallmark of the Chinese rule. President Trump doesn't do that.
But as you heard Hank Greenberg say, though, I mean, he thought it was a step in the right direction, though, to have better relations with the Philippine president. He seems to give a little bit more credit, though, that there's more to be gained, right, from having better relations with the Chinese president than not.
Well, it's first of all, let me not give the wrong impression. It's very important that the United States have a constructive and very active dialogue with the Chinese leadership. These are the two most important nations in the world, both economically and in terms of geopolitical influence. And the relationship these two countries have with each other is therefore crucial, both to each other, but also to world stability and progress around the world. So that's very important. All I'm trying to say is that President Trump has a habit of just going there and saying, my friend Xi is fabulous. Or my friend Duterte is fabulous, or whatever the country he's in is.
Right.
And that's a little different approach than the United States has historically taken, where there was always a balance. That doesn't hurt us. I'm not saying that hurts us. It doesn't whatsoever hurt us. It's just a little different.
A little different indeed. I would say a lot different when you look at President Trump's tweets, right? So this was quite interesting. He seemed quite disciplined in Asia, but then when it came to the weekend and he was quote unquote sort of let loose on Twitter, Roger, I just want to read for you one of his tweets. You've probably seen it already. Why would Kim Jong-un insult? Yes, you saw that, right? Insult me by calling me old.
When I don't call him short and fat.
Right, exactly. You took the words right out of my mouth. I try so hard to be his friend, and maybe someday that will happen.
Well, this is just Trump diplomacy. It's different than we've seen probably ever.
But do you think it's going to? I mean, he's taking a different approach.
Do I think it's effective?
Yes.
Wait. Do I think it's effective that he take that ad hominem approach to Kim Jong-un or any other foreign leader and talk about how they're short and fat? No, I don't think that's constructive. But that's President Trump's style, and he's not going to change it.
I think at one point you had said there's a 70% chance it's going to go through. Do you think we're going to get tax reform done this year? No,
I don't. I think the chances for a bill next year are a little better than the alternative, no bill. But I wouldn't say it's more than 55-45 or 60-40.
For next year?
throughout this whole session of Congress.
Process.
But I don't think it's going to happen this year, and I don't think anybody else does either.
Why?
Why won't it happen this year?
Yes.
I just don't think the House and the Senate are going to be able to reconcile their differences this year. And I also think it's unclear which bill, the House version, the Senate version, or which conference committee version of the compromise will be able to garner the necessary 52 votes in the Senate. 50 votes plus one in the Senate. And you know, of course, the Republican strategy, it's rather understandable, is to try to pass this on the same Republican-only basis, which they tried to use with the repeal of Obamacare. That's always going to be challenging when you only have a two-vote margin in the Senate. Yes. And you already see, for example, Susan Collins saying, I'm not in favor of repealing the estate tax. That's probably why the estate tax, while the ceiling is lifted, is kept in the Senate bill. So they have very little room to work with, and I don't think they're going to reconcile these differences between now and the end of the year. You
know, Roger Mnuchin, though, just saying that he sees minor differences between the House and the Senate. Where do you think is going to be the biggest issue that's going to really derail this?
I think there are several of them, but certainly the debate over the state and local tax deduction is one of the very biggest. As you know, the Senate bill does away entirely with the deductibility of state and local taxes. The House bill does away mostly, but says that property taxes up to $10,000 a year would still be deductible. But for high tax states, New York, California, Illinois, New Jersey, this is very difficult because they'll probably be forced to, if it went through, to lower their own taxes, and that would impact, obviously, services from Medicaid, state share of Medicaid to infrastructure and everything else. The question is whether Republican members of the House from those states, from California, from New York, from Illinois, New Jersey, several of whom have already said they can't do it, will be able to support the bill. And if you lose enough of them, you don't have the votes in the House. So that would be I don't know about number one, but right up there on the list of controversies. There's obviously big differences on the things like the implementation of the corporate rate cut, as she was just saying. There's differences on number of brackets. There's differences on a whole variety of issues, the estate tax. I don't think it's going to be so easy to reconcile those when you juxtapose that against a two-vote margin in the Senate.
And Roger, it's Yvonne in Hong Kong. I just wanted to ask a little bit more about the corporate tax rate as well. I mean, Treasury Secretary Mnuchin saying he's not concerned that the Senate bill delays that corporate tax cut. Do you think that proposition is a little bit more favorable than perhaps lowering and cutting that tax rate from 35 to perhaps 25 to 28%, which you have suggested before?
Well, I think it's going to be tough to get through a rate as low as 20%. There are a lot of independent analyses around that show that the overall bill, whether it's the House version or the Senate version, would actually cost $2.5 to $3 trillion over 10 years, as compared to the 1.5 to 1.7 estimate, 1.5 specifically, that the Republican leadership is talking about. And I think the cost of the bill in terms of deficits is going to become quite a controversy as they try to cast the votes. And so whether the corporate rate ends up at 20, whether it's effective, whatever it is, next year or the year after, the way the Senate bill does, these are tough questions, again, with such a narrow margin in the Senate.
We're just talking about tax reform and the likelihood of whether it's going to pass or not next year. But, you know, if it does pass, let's say, do you think it's going to be accretive to the economy? Is it going to give it a boost?
I think the answer is yes, initially. A corporate rate cut of that size ought to be a positive for business fixed investment, among other things, and provide some growth element. I also think you're seeing the markets anticipating a tax bill, and to some degree they're higher and higher prices, and we've seen so much of that, are reflecting the anticipation of a tax bill. So that tells you that the market expects it to be growth inducing.
Right.
So I would say yes. I mean, are the House and Senate versions the most pro-growth bills, or like the most, approximately the most pro-growth bill that Congress could pass? I would not say that. I think there's a much more pro-growth approach that could be taken. But I think this bill, on balance, would provide some growth, yes.
Now, Roger, let's say on the flip side, though, and it doesn't pass, do you see that being a catalyst for a severe market correction? Because we've just been continuing to go up and up here in the markets.
Well, If I knew the answer to that, we could have this interview on some gigantic yacht. But I don't know the answer. I don't have a yacht, so I don't know the answer to that. I think from a historical point of view, even apart from a tax bill, we're overdue for a correction. And anytime you see, I think we've had 15 consecutive months of increase in the S&P 500.
Yeah.
Anytime you see frothiness like that, it makes you wonder whether we're on the edge of a correction. So I'm not smart enough to say it's in 3 months, it's in 9 months, just not smart enough. But I think historically, the more the market rises in an uninterrupted way like it has, the more a correction is closer.
But we've seen President Trump take credit for for the stock market the stock market rally, taking credit for the animal spirits in the markets. And I'm curious if you yourself see the animal spirits not only in the markets but also in deal making.
Yes,
I mean, has Trump been good for deal making?
Well, it's always hard to separate precisely the contribution he's made from broader events. But in his defense, presidents do take credit for stock markets, good stock market conditions, so he's nowhere near the first to do that. And if you look back, I mean, it's about a year ago since he was elected, almost exactly. And quite quickly after his election, literally within a day or two, the market started to rise. And it's more or less risen ever since. So I think you'd have to say that the Trump effect has been positive for the markets and has been at the margin positive for deals. Deal volume, if you look at it in number of deals rather than dollar volume, was very healthy before the election. It's really been quite good in 2015, 2016, and now 2017.
Right.
What's a little bit better now, and particularly in the last 2 or 3 months, are the presence of certain larger deals, which wasn't particularly the case earlier this year or last year. But fundamentally, deal volume was healthy.
What's changed there?
Well, it's hard to say. I mean, it's some level of it is undoubtedly animal spirits. But historically, the higher stock prices go, and this is really ironic when you think about it, the more that decision makers want to do deals because it makes them feel confident, it makes them feel adventurous, and so even though you'd say, wait a minute, buy low, sell high, don't buy high. It doesn't work that way in practice. The higher the stock prices, the higher you see stock prices, assuming that they're at relatively high levels rather than just rebounding from a very low level, the more deals you see. And that's playing out right now.
Yeah, equity valuations certainly are going to be tough for M&A, Roger, but this is coming at a time when we're seeing rallies on stock markets, but a very different story, in fact, a divergence when it comes to what the bond market is pricing in, and you continue to see this yield curve flatten. Should we be concerned, or is this really just a function of the Fed being in this tightening cycle?
I don't think the current level of interest rates or the anticipation of a Fed rate hike in December is a problem for the environment for transactions. I think that's all baked in. And after all, I think the 10-year today closed in the vicinity of 238, 235. And by any historical standards, that's rock bottom. And so what you have here are high stock prices, very low interest rates, robust credit availability, and pretty high levels of business confidence. And always, those ingredients make for a high level of deal volume.
And Roger, I wanted to maybe perhaps shift the conversation a bit in terms of talk about China here and opening up its financial markets and lifting the limits when it comes to foreign ownership for some of these securities companies. Do you think that Western financial institutions want in on this, or are they pretty much late in the party here now that the economy has slowed and the PBOC governor himself is calling for some possible Minsky moment?
It's a tough call for a lot of financial institutions because very few of them, if any, and I'm talking about larger institutions, are able to make money in China. It's one thing to sell assets to China parties. We've done a fair amount of that. But to make money operating in China, working with Chinese entities, that's proved very hard. So whether this brings forth increased investment by Western financial institutions into Chinese entities, I'm not sure. It may not, but it really varies from institution to institution, including what operations you already have in China. So this is very much a case-by-case situation, but broadly speaking, it hasn't proved very profitable to operate within China for Western institutions, and therefore it's a tough equation for them.
Roger, before we go, I want to just get back on the Fed for one moment and ask you about Jay Powell. Do you think President Trump made the right decision with Powell?
I think he made a perfectly good decision. Jay Powell is an experienced, sober, serious person, and I think he'll be a fine Fed chairman. So I think President Trump, in general, chose well, and I think a lot of people heaved a sigh of relief when he chose Jay Powell.
And not someone like perhaps John Taylor. But are we underestimating the disruption in the markets by his appointment? Are we underestimating this?
I don't think so. We may have market disruption for reasons we talked about a few minutes ago, but I don't think it's going to be on account of Jay Powell. He is a reassuring figure, not a figure that causes anxiety. So no, I don't think so.